BlackRock's bold move, the $12 billion acquisition of HPS Investment Partners. Let's unravel one of the biggest financial shakeups of the year, BlackRock's eye-popping $12 billion acquisition of HPS Investment Partners, a move that has left Wall Street buzzing and investors speculating about what's next for the global financial giant. This isn't just another corporate merger. This is BlackRock doubling down on the lucrative and rapidly expanding private credit market. But why now? And why HPS? Is this a genius move to dominate an underexploited sector? Or a risky gamble that could backfire? By the end of this video, you'll not only understand the mechanics of this deal, but also what it means for you as an investor. But before we get into the details, let me hit you with this. Private credit is now one of the fastest growing sectors in finance. And the question everyone's asking is whether BlackRock is positioning itself as the king of this $1.5 trillion industry. Now let's break down the deal. BlackRock, already the world's largest asset manager with over $10 trillion under management, has been eyeing private credit for years. HPS Investment Partners, with a robust $94 billion in assets under management, specializes in direct lending, distressed debt, and structured credit, all areas that have surged in demand as traditional banking systems face tighter regulations. So why is this acquisition such a big deal? Because it positions BlackRock to dominate a market that's increasingly replacing traditional bank loans. Private credit has become the go-to option for mid-sized companies looking to borrow without the bureaucratic red tape of conventional banks. But here's the kicker. While private credit offers high yields, it also carries high risks. So, is BlackRock taking on more than it can handle? Or is this a calculated risk that will pay off in spades? Hold that thought, because we're about to dig into the numbers that could make or break this deal. The private credit market has grown exponentially in the past decade, fueled by low interest rates and the tightening of traditional banking regulations post-2008. HPS's portfolio is rich with high-yield opportunities, but it's also exposed to the risks of defaults in a high-rate environment. $12 billion is a hefty price tag, even for BlackRock. Is this an overextension or a visionary move to secure dominance in a market that some experts predict will grow to $2.5 trillion by 2030? Now, let's pivot to what this means for you, the investor. If you're holding BlackRock stock, you're probably wondering how this acquisition will impact its share price. Historically, BlackRock has been a juggernaut of stability, but big moves like this can unsettle markets. On one hand, the deal could boost BlackRock's revenues and expand its offerings, making it more resilient in volatile markets. On the other hand, if the private credit market hits turbulence, the risks could spill over, affecting investor confidence. And let's not forget about HPS's existing clients and partners. Will they stick around under BlackRock's new management, or will they jump ship? These are the questions analysts are grappling with, and they're the same ones you should be asking if you're considering an investment in BlackRock or its competitors. Speaking of which, have you diversified your portfolio to hedge against these kinds of uncertainties? If not, now might be the time to start. And if you're finding value in this analysis, make sure to share this video with your friends because knowledge is the best investment. Interruption time. Did you know that private credit now accounts for over 10% of the global debt market? That's a staggering figure, and it's growing every year. If this is news to you, hit that like button, because we're all about keeping you ahead of the curve. Back to the story. The timing of this deal is also worth dissecting. With global markets facing heightened volatility, from geopolitical tensions to inflationary pressures, BlackRock's move into private credit could be seen as both a hedge and a pivot. By diversifying away from traditional equities and bonds, they're positioning themselves to capitalize on a sector that thrives in times of economic uncertainty. But let's not sugarcoat it. The private credit market is not without its pitfalls. Rising interest rates and slowing economic growth could lead to higher default rates, particularly among mid-sized companies that rely on private lenders. The big question is whether BlackRock can leverage its scale and technology to mitigate these risks. Remember, this is the same company that revolutionized asset management with its Aladdin platform, a risk management system used by investors worldwide. If anyone can navigate the complexities of private credit, it's BlackRock. But is that enough to justify a $12 billion bet? Let us know what you think in the comments. And let's not overlook the broader implications. This acquisition is a wake-up call to other asset managers and banks. By making such a bold move, BlackRock is essentially signaling that private credit is the future of lending. Will this trigger a wave of similar acquisitions, or will it create a competitive moat that other firms can't cross? Either way, the landscape of global finance is shifting, and as an investor, you need to pay attention. Whether you're into stocks, ETFs, or alternative investments, understanding these macro trends is key to making informed decisions. So, what's your strategy? Are you ready to ride the wave of private credit? Or are you skeptical about its long-term viability? If you've got thoughts, we want to hear them, so drop a comment below. As we wrap up, let's zoom out and consider the bigger picture. BlackRock's acquisition of HPS Investment Partners is not just a business deal. It's a statement of intent. It's about seizing opportunities in a market that's ripe for disruption, even as it faces significant risks. Whether this move turns out to be a masterstroke or a misstep will depend on a myriad of factors, from economic conditions to execution. But one thing is clear. This is a story that will shape the future of finance, and you don't want to miss it. If you found this breakdown insightful, make sure to hit that subscribe button and turn on notifications so you never miss an update on the stories that matter most. Until next time, stay curious, stay critical, and keep questioning the narratives that shape our financial world. And remember, the best investment you can make is in your own knowledge. See you in the next video.